Hey everyone, Lance Ippolito here, and I want to talk about the new Buzz ETF that's been buzzing all over social media and Wall Street here. So Dave Portnoy said, I'm going to launch an ETF and I will not take my cut of commission if we don't beat the S&P, because how they work is by assets under management. The more assets under management, they get a small percentage fee. But he said he's not going to take his cut if that Buzz ETF doesn't beat the S&P, which I like and I respect. Although there's a lot of hands in that pot who are going to take a commission, and we'll see what the expense ratio is going to be once it comes out. But here's the problem with that Buzz ETF. It's going to track the hot social media stocks that are, buzzing around Reddit and Twitter and StockTwits and all that stuff. But you have to think, what about the other side of the trade? So there's algorithms specifically wired to run stop orders, or basically when you put in an order to buy, let's say at $10, and that stock goes to $9, you get stopped out, and maybe it bounces right back up to, let's say, $9.50. Those stop orders will literally pick those trades off, and they can just run stops, therefore causing the share prices, when they do sell and when they do start going down, to really come down drastically with those sell programs. So those stocks might have their time in the sun for maybe a day or two. Maybe they'll be added to the ETF, and maybe they'll do end of day transparency like the ARK ETF. But I think after that initial pop, like, oh, AMC got added to the Buzz ETF, and then everyone goes and buys it, that momentum will fade and those stocks will move lower. We've seen that really recently. If you look at a lot of SPACs, like, the IPOE, IPOF, if you look at like a lot of popular stocks like Churchill Capital with Lucid Motors, CCIV, if you look at PLTR, if you look at even like Rocket the other day, it was up like 60%. Today it's down 30%. Once everyone hops on that wagon, it usually starts to break down, right? I always use the analogy of a boat. When you have everyone on the same side of the boat, eventually that boat's gonna, start tipping over and leak some water, and that boat's, gonna sink. And that's what usually happens. I'm not saying it can't work out. Maybe they'll have, great active management. Maybe they'll pick really cool stocks and have a diverse portfolio. Hey, I think it's great for the industry. It's getting a lot of people in the market. And we've had, ETFs, like we have, the TAN ETF for solar stocks. We have the social media ETF. If you want to look at social media stocks like Facebook and Pinterest and Twitter and stuff like that. So that's cool. I just don't want it to be another kind of hype job, and then a lot of people get left holding the bag. That's my main concern out there. So hopefully, it will run. Hopefully, it will be a name that trades lots of volume, and he can make tons of money because it will have tons of assets under management. And I think it will be cool. But I also, I'm not a huge ETF trader. I don't even really look at ETFs in general, except the spider ETFs, when looking at overall market. So, it's something new. It's something fun, but just want to warn a little bit of caution. Don't get caught with your pants down. It's not a good feeling, and obviously losing money in the markets is not a good feeling. So stick with what's working. Stick with names that you feel comfortable and confident in. Don't just hop in a name because you read a cool report online about the stock, and now you're gonna, go commit all your eggs in one basket on the stock. Hope it helps. Let me know what you think of the Buzz ETF. I mean, the market is crazy right now. I feel like every day we're seeing a new GameStop or Rocket or AMC, which, to be honest with you, I'm really active and I trade and have tons of stocks on my watch list, but I don't follow that crap really. It's entertaining, but I ain't putting my money in it.